Today, it was announced that DiDi is no longer going to be trading on the New York Stock Exchange after a heated past couple of months since DiDi IPO'd. We're going to talk about the implications of this move if you own shares of DiDi or if you own shares of other Chinese stocks. So let's get right into it. Welcome back to another video. My name is Adam. On this channel, we talk about stocks, finance, investments, cryptocurrencies, and how to save money where it counts. And DiDi did not have a good day if you're an investor. I mean, if you bought in at the IPO, you would have been hurting quite bad. It's down 57% over the past 6 months. It IPO'd at $14. So even if you bought at IPO, you'd still be down by 57%, which obviously hurts anyone. And if you own shares, a lot of people are wondering, well, what's going to happen to my shares? You still own the rights to those shares. You still own the rights to part of DiDi. However, you just won't be able to trade them on the New York Stock Exchange. Now, it depends what brokerage you go through. You may still be able to hold DiDi shares, but they'll just be listed either on the over-the-counter markets, the OTC markets, or they'll just be listed in Hong Kong. So again, let's talk about this a little bit more in depth. But first, why did DiDi exit the New York Stock Exchange? Well, there are rising tensions between China and the US in terms of like politics, economics, the main one being politics, of course, like it's communism versus democracy, which one will win? Right now, Beijing is pushing its companies to basically bring investors and investing companies closer to home. So the decades-long trillion-dollar love affair between China and Wall Street is coming to an end. So DiDi, a $39 billion company that is China's answer to Uber, said on Friday that would delist its shares from the NYSE. Just 6 months ago, DiDi was a Wall Street darling, raising billions of dollars. I believe it raised about $4 billion from its offering in the New York. And I mean, so many investors got into DiDi, especially American ones, and now they're like about $1.5 trillion have been wiped off of Chinese companies because of this sort of, well, first there was a tech crackdown. Now due to DiDi, there's like concerns of cybersecurity. So it's just not a good look at all. So DiDi's abrupt decision to leave brings home a stark truth for Wall Street. China doesn't need it anymore. The world's number 2 economy has plenty of its own money and few problems attracting investors from elsewhere. So a lot of, they just talk about what's happening right there. The American government, which sees China as a great economic, political, and military rival, has been putting pressure on its own Chinese ties and have forced some state-controlled Chinese companies to delist their U.S. shares on Thursday. And the U.S. SEC adopted rules that would require reluctant Chinese companies that listed in the U.S. to further open their books, so basically to auditing practices basically, or get kicked off of their stock exchanges. And of course, China doesn't like it because this opens sensitive information to the wider world. And of course, if you know anything with communism, they like to keep their books closed. So of course, that's not, that's really, really not good. And right now there's about 2.1 trillion shares trading on exchanges. The most prominent is Alibaba. I don't own shares of DiDi, but I do own shares of Alibaba. And that's an e-commerce giant similar to Amazon of the US, which once conducted the biggest IPO in the world when it sold shares in New York in 2014. The company didn't immediately respond to a request for comment. And I mean, we've seen what happened with Alibaba. And I mean, it also tanked by 8% today. Over the past 6 months, it's also down by 48%. Over the past year, down by 58%. And I mean, it lost, again, like over half of its value. So it was about 700 billion market cap. And right now, still trades on the New York Stock Exchange. I don't think that's a direct threat of Baba being delisted. We'll talk about that soon. I just wanted to share the implications of what it means of DiDi being delisted first. So basically, short answer is if you hold a foreign stock and it gets delisted from a US exchange, you still own the stock. A stock's listing status has nothing to do with ownership rights. Your holdings are still valid. However, you lose the ability to trade the stock on US exchanges, and its NYSE or NASDAQ ticker disappears. In this scenario, you may still be able to trade the stock over the counter or OTC. Most brokerages allow OTC trading. I'm not sure if Robinhood allows it. I know that Wealthsimple, the brokerage that I go through, doesn't allow OTC trading just yet, and not all stocks are supported. So I know that I have some shares of Alibaba in my Wealthsimple account. I have other shares of Alibaba in my TD account. I know that at least on my TD account, I'm allowed to trade Alibaba over the counter. In fact, Alibaba already has their own over the counter market stock. Okay, the ticker symbol here is BABA F. So Alibaba trades on over the counter on the New York Stock Exchange and in Hong Kong as well. It's like a number, but basically, like, they had over-the-counter market listing since November 27th, 2019. And you can see the chart right here basically resembles, since its peak, down like 64%, market cap of 304 billion. So, I mean, basically same thing with the New York Stock Exchange listing, market cap of 304 billion. So nothing really changes. It would just your shares would get rolled over to the over-the-counter listing if if your brokerage supports it. And same thing with DiDi. Your shares on the New York Stock Exchange would just get rolled over to shares on in Beijing. So that's basically what would happen, unless your brokerage doesn't support that. And then I'm not sure. I think you would have to liquidate your shares in that stock. And potentially buy back in with another brokerage if you wanted to own shares of that company. So this person did some research, and he was able to, through TD Waterhouse, which is, again, what I trade with, he was able to buy some of these over-the-counter holdings, except for some that are, only have like 2.3 million market cap. But Alibaba has, as we've seen, a 300 billion market cap. So has DiDi. It has a 29 billion market cap right now. So if you still want to own shares of DiDi, you can. It would just be listed on the over-the-counter or the Hong Kong market there. So that's basically the question to it. Let me know what you think of DiDi stock, Alibaba stock, Baidu, of all these other Chinese stocks. Are you buying the dip? I'd like to know your opinion. Give this video a thumbs up if you enjoyed it. And love you all. Subscribe if you haven't already. Check out some links down below in the description to support me. Check out my Patreon as well as my Discord. That's totally free to join. And yeah, until next time, I'll see you. Love you all. Peace.